The broadcast is now starting. All attendees are in listen-only mode.
Well, good afternoon, everyone. Welcome to the 10-Minute Investor. Todd Schaefer here with you. I'm the manager of research for VectorVest. Hope you are doing well. I've had my final sip of coffee here, so I'm good to go. So I hope you are too. So, this webinar is one of my favorites to present because I get to show you how you can consistently outperform the market in less than 10 minutes a day. And that doesn't mean we're doing a 10-minute day trade. That means you're going to do a daily routine that's only 10 minutes long in duration, right? So it's a more relaxed approach, kind of like the guy here in the hammock, where it's not some frenetic thing, but it's in fact something very casual and laid back, no stress, no muss, no fuss. You can do it whenever you want, any time of the day or night. All right, and so my promise to you from this presentation is that by implementing the things that I'm going to show you today, you're going to be able to invest with confidence and really outperform the market in that 10-minute a day routine. So, you're in the right place if you've ever had that experience of buying stocks only to see them drop off the table right after you buy them. In fact, a lot of times it feels like the market makers out there watching your trade, so as soon as you buy it, they can sell out from underneath you, right? Or maybe you're frustrated because you don't know when to sell your stocks, right? Maybe you've had some winning trades, but then you sit there and watch your winner become a loser simply because you didn't know when to sell. Or maybe you feel you don't have enough time to manage your stocks effectively, right? With today's hectic time frames, frenetic lifestyle, you have family obligations, maybe work still, and you just don't have time to devote to your trading to feel that you're effective. Or maybe you just don't have any confidence that you can actually make money in the markets just from all the mistakes that have happened to you in the past, right? So if that's any of you, if you're in any of those situations, then I feel for you, right? Maybe you just want a simple way to buy the right stocks at the right time. All right, so if those are any of your situations, you're in the right place because today we're going to learn how to move from inconsistent performance to consistent performance. The second part of our presentation is going to be focusing on how to pick winning stock trades. And then finally, I'm going to pull it all together into a 10-minute portfolio plan, which of course is why this presentation is called the 10-minute investor, right? But we're going to put it all together in a 10-minute routine that you can do every night. All right, so those are the big pieces that we're going to accomplish today. And I'd love for you to stick around to the end because I'm going to hand out a template that you can use to help develop your own personalized trading plan. All right, so I'll hand it out through the GoToWebinar toolbar here, and you can download it as a PDF. For those of you following on YouTube, we'll provide a link there as well. All right, so let's start off by me asking a very simple question. Right? And before I move on, I don't want to leave Jeff behind. So let me do an audio check. And let me type a note to Jeff that lets him know that we are broadcasting. So if you guys can confirm for me that you're hearing me okay, that would be great. Thank you, Richard. I appreciate that. Let me get my note off to Jeff so that he knows that he needs to restart or something. Okay. So I like to start off the presentation by having you do a little bit of reflection and feedback for me. And this is a very interactive presentation, by the way. This is not going to be a lecture. What's been the hardest part about making money, particularly consistently for you in the markets? Where do you find yourself struggling? Particularly, is this something that you keep hitting your head against the wall in this one particular aspect? Where do you find yourself running into that wall? Chat me up in the box, if you will. Let me know where you struggle. I can take a pretty good guess at what most of your replies are going to be. And boy, I'm going to have to ring the bell. I don't want a bunch of wallflowers. This isn't going to be very fun if you guys don't interact with me. So interact with me. There we go. Damon starts off with getting the right stock at the right time, finding the best entry, says Mark. Yes, Jeff, we are recording it. Which stock to buy, says Deborah. Making a decision to buy or sell, I'm locked, says James. Yeah, I feel that pain. So typically, your answers fall into one of three buckets, I like to say: when to buy, what to buy, and when to sell. Those three buckets, or those three pillars, form the basis or the foundation of any trading system. Right? So let's carry forward on that idea and talk about then why most of us are struggling to begin with. Right? You may or may not be surprised to know that most people fail at investing, or at least struggle to outperform the market. Here's a study done by the folks at Dalbar back in 2016 at the end of the year. The S&P 500 performance versus the average investor returns. And you can see that consistently, the average fund investor is underperforming the market, right? Because the average fund underperforms the market. So that's not surprising, right? And if the funds are underperforming, as individuals, what happens to us, right? Well, you curse the market out of frustration, or as we described before, maybe you label yourself as the problem, right? Or even worse, right? But I'd like to stop that negative feedback loop for a second here and get you to picture a different outcome. If you could do this right, if I could show you that you're capable and that you could trade effectively, right? What would that look like? Well, first of all, you wouldn't have to stress about your trades anymore because now you're being effective, right? And you'd be able to go into any trade knowing you've got things under control. Even if the trade goes against you, which some still will, of course, you'll know you have everything under control. And that leads you to trade with confidence, right? And from a performance psychology basis, that makes all the difference. So let's kick off today's presentation. In our first section, we're going to look at how to move from being inconsistent to being consistent. And the first thing I need to do is to identify and fix the mistakes that you're making that are causing you to be inconsistent. So VectorVest has been in business for about 30 years, coaching individuals in their own portfolio management. Right? And we've identified in that time frame the four biggest mistakes that we consistently see causing folks to be inconsistent. So obviously then it's extremely important for you to understand and eliminate these mistakes if you're making them. Otherwise you will never fix things. Right? So that's a pretty strong statement. So let's take it seriously. So the first mistake that we see people making is that they think of the money first. Now, if you're typical of most folks, you blanch at that saying, well, of course I'm thinking about the money. I'm investing in stocks, right? It's all about the money. That's why I'm here. But what I really want to say, or what we really want to paint this as, is if you're thinking about the reward first, that's the trap. Right? If you're thinking about the boat you're going to buy with all your winnings, right? That's the trap. And the trap is when you struggle, or when you see yourself having less than stellar performance, you start to tighten up. Right? So you start making emotional decisions because you're getting anxious. If you think about successes you've had in the past, whether it's in your career or a sporting event, just think of something that you've done well in your lifetime. Did you do that activity well because you focused on the rewards, or because you focused on the fundamentals? So to apply this to our trading, let's focus first on making good trades. The money will follow. Because as I said, when you focus on the money first, then you start making emotional decisions when things come off the rails. Especially when the market is up or down big time. I mean, just look at the past 2 weeks, right? There's a lot of emotional trading going on. And when you're emotional, or making emotional decisions, you're typically making poor decisions, or at least not the same decisions that you would have made had you stayed in your rational self. Now, I like to use road rage as an example because most of us have experienced it, right? So whether you were the instigator or the victim doesn't really matter, right? If you think about your last road rage incident, are you proud of how you performed during the incident? If you were the victim instead, were you not thinking, man, that person is a nut job? Right? So most of us recognize that, wow, I gave myself over to my emotions and I did go a little bit off the edge here, right? And I certainly didn't behave the way I would have behaved had I stayed in my intellectual zone. Right, so I have a little quiz for you. It's like a little game I like to play. I'm going to present you with 5 statements. And I want to see if you've made any of these statements in your trading. And if you notice one that you've said, let me know in the chat box the last time you said it. All right, so here's our first one. I know it's down now, but it'll come back. Have you ever said that relating to a stock trade you were in? Or how about number 2? It's already down 20%. I might as well hold on to it now. Or how about number 3? I have a profit, but if I close now, it'll probably keep going up. How about number 4? I know I lost more than I thought, but if I close now, it'll probably go up tomorrow, or at the conference call, or at the earnings release, or whatever. Right? Pick your poison. And number 5, the last time I sold a stock, it kept going up, so I'm not selling this one yet. Right? So those are my top 5. Have you said any of those as it relates to a trade? And Jeff, yes, sure. Damon, yeah, of course, says Mark. Yes again, Mark, yeah. So 1 to 5, says Deborah. Gotcha. Right? A lot of us have said all of them. Have you said any of them more than once? Okay, gotcha. Yeah, daily, says Jeff. All right. Well, here's the payoff, right? What do these things all have in common? What do these statements all have in common? Well, they're emotionally based. Right? Every one of them is an emotionally based statement. So if you're thinking any of these things before, during, or after your trades, you've been trading emotionally. And we just said if you're trading emotionally, making emotional decisions, you will not be successful. Ouch, right? So if you want to be consistent, you've got to get rid of this emotional decision making. And what's the solution to emotional trading? Well, it's to build a system. You need to have a system which keeps this an intellectual process, not an emotional one. Now, do a little gut check for me, right? I just had you relive some of your trading mistakes and your latest road rage incident. Did you feel the knot in your stomach, right? Did you kind of feel the adrenaline kick in a little bit and you kind of tensed up just thinking about it, replaying it in your mind? Right? Well, let's pause here for a minute. Let's close your eyes, get back to your happy place. Let's get rid of that anxiety piece because this is still the first mistake. We have 3 more to go. Right? Now, this one's more psychological. The rest are more mechanical. Right? But let's move on and talk about the next mistake, which is we buy stocks that are going down. Now, correct me if I'm wrong, but when you first got into investing, in fact, when you take on any new endeavor, right? You're new to it, you don't understand it, you know you're not good at it. So what do? You try to get some pointers. So for me, when I first started investing back in the 70s, that meant I went to the library and I got the fattest books to do my research, right? Maybe you subscribe to a financial newspaper or a periodical, right? You're trying to get some insights into how the system works so that you can be successful. It makes sense, right? Whenever you try to take on something new. Well, who writes those books? And now, currently, right now, you go onto the internet, or you just take a look at your email inbox, or listen to the talking heads on television, maybe the screaming heads on television. Who are those people generating all of that copy? Well, they're the industry pros. We like to call them the industry gurus. And the industry gurus, or the industry advice, is that you should buy stocks that are going down because they're getting cheaper, so you can buy more for the same amount of money, right? And in fact, if you keep buying more shares as the price falls, you'll have a lower cost on average, right? So when it finally does bounce, you'll make more. Well, that's all true. But there's a problem. They're setting you up for a failure. Let me show you what ends up happening a lot of the time when you buy stocks that are going down. Here's a real life example from one of our clients. When he first came to us, he showed us this stock. So let's talk about it. First of all, it's a graph of a typical stock. It's Windstream, but for the moment, let's just forget who it is or time frame, right? It's a 52-week chart, daily candlesticks, right? So it's a graph of a typical stock you might get told to buy because it's low, right? The price has been pulling back off of its high. In fact, it's just coming off of its 52-week low. Now is a perfect time to buy. How much lower can it go, right? So we'll just get in now and we'll ride this puppy back up to its former glory. Well, if you want to extend that logic, well then, yeah, okay, this may be the best time to buy coming off the 52-week low, but then this was probably also a pretty good time, as was this, right? And this puppy just kept on falling. So back in February, on this date line, this orange line represents when our client brought this to our attention to ask us about it, right? And basically, this is our coaching session. We get together with our clients several times throughout the week. But in this Thursday coaching session specifically, we talk about what I'm going to talk about here. He chatted into the box. He's in a webinar just like you are now. And he chatted into the box. His name was Steve. Hey guys, what do you think about Win? I just bought it 2 days ago. So the orange line is where he chatted us. That last green candle, I hope you can see it with your screen resolution. That last green candle was when he bought it. Ever bought the last green candle? Yeah, me too. And I'm not here to tell you, by the way, that you'll never do it again. Of course you will. Right? The difference is you're going to have a plan moving forward to know what to do about it, right? But we'll talk more about that in a minute. The main point that I want to get across at this point, right, is that after we talked about it, he said, okay, I'm selling it now. Right? And it's a good thing he did because it continued to drop another 10% over the next 2 weeks. And a total of 62% before it actually moved to the upside. Right? And now I think they've gone bankrupt. Right? But keep this in mind. What you see in the past is most likely what will happen in the future. So being taught to buy stocks that look like this is one of the big reasons you get set up to make the third mistake. And that is holding on to losers too long, right? So you might have been just like Steve, where you buy the stock, right after you buy it, it starts to drop. So you end up holding it, waiting for it to come on back, right? Take the bounce. I couldn't have been wrong on this one too, or maybe I should buy more of it. Probably the worst solution, right? One of the worst things you can do is buy a stock and not have an exit plan. It's like jumping out of a plane without a parachute. So if you look back at that Windstream trade, a lot of investors would have just sat on it, hoping and praying for it to come back. And they find out they're still holding it months, sometimes years later. It's doing a couple things to you if you think about it. So the first one obviously is you've got a loss on the trade, right? But you tell yourself, well, it's not really a loss because I haven't actualized it yet. So it's only a paper loss. Well, okay, true enough, I suppose. But the reality is it's only worth what you can sell it for today. So if you came under financial duress, you needed to liquidate the position to raise money, you're going to get today's price. So kind of short consolation. The second thing is there's an opportunity cost coming with this while you're waiting for it to take its bounce. Your money is tied up in this trade instead of being available to be put into a trade that's actually rising, doing what you want it to do. So there's an opportunity cost by being stuck in this guy when it continues to fall. So even if 5 years from now it does finally get back to its former glory, is that a win? And here's the third one that's probably the most insidious. Every time you open up your portfolio, you have this big double-digit red number in the portfolio. It's a constant reminder. Every time you open your account, it's a constant reminder that you stink at this. What's that doing for your performance psychology? Right? So there is a way out of this. Right? I'll share that with you here in a minute. But just to put the capper on it, here's another example from a woman who came to one of our coaching sessions again. This time, though, she had entered the stock at the high and held it all the way through this downdraft. Of course, so we had very much some of the similar conversation, right? But when we asked her why she hadn't sold it yet, she said she hadn't sold it because her husband thinks it'll come back. So now by not having the exit plan, not only has it caused the monetary loss and the things we just talked about, it's also causing unneeded stress in her marriage simply because they hadn't decided or agreed at the onset when they were going to close the trade. All right, so we want to make sure that we know the answer to the question, or answer to that question before we even enter. All right, and finally, our fourth mistake, and probably the biggest, is that people ignore market direction. Right? So for years, the market gurus have told us that buy and hold is the way to go because you can't time the market. Right? Unfortunately, that causes a roller coaster ride in your portfolio. And just like the roller coaster, the way up is slow, but the way down, well, yeah, probably faster than you really care. Right? Here's a chart of the market from 2000 up through 2015. I'm guessing there are people in the room who held stocks or mutual funds through the dot-com bubble burst. Yeah, I see you raising your hands, right? When it burst, right, market pulls back, bottoms here in late 2002, and then we rally into the market highs into late 2007, right? So it takes us, 5 years, 6 years to make our gains back, right? And then a year and a half for us to lose almost everything, right? If we look just at the global financial crisis part of this drop, right? In 2008, the market drops about 40%. When you lose 40%, you need to gain 66% just to get back to break even. For most of the people that I'm coaching that have in their mind an annual goal of about a 10% return on their investment, do the math. That's 6.5 years of recovery to get back to break even. Right? So it doesn't take much imagination to say, well, geez, if I had any bit that I could have minimized this 40% pullback, would have helped me out on the eventual recovery. And of course, you also had to have the courage to buy back into the market after the financial crisis. Right? Well, if you're looking for your emotional state for that answer, good luck with that. Right? So that happened to our case study for the day, Robert. He wrote us this letter, and he said he retired in 2005, but when the financial crisis hit in 2007, he said we'd used professional advisors for direct shares and a few managed funds to build up our retirement portfolio. They all told us to ride it out. By mid-2008, our portfolio had lost 40%. Our retirement plans were in ruins, we were in total despair, and it looked like I'd have to get a job. So before we look at Robert's situation in more detail, I want to pause a minute here and help you do another little personal inventory. All right? We just went through the 4 mistakes. Thinking of the money first, buying stocks that are going down, holding on to your losers too long, and ignoring the market direction. So you don't have to share this with me. You can if you want, but I want you to know for yourself, for your own use, of those 4 mistakes, which ones have you made? So reflect on that here just a little bit. Which ones of those mistakes have you made? Have you made any of them more than once? All right, so now let me turn up the heat on you. All in yes says Jeff, all way too many times says Mark. All right. How much of the 4 mistakes that you've made, and even if they were repeatedly, which one cost you the most amount of money? Hard dollars, not I lost 40%. I want you to put a dollar figure on it. Which of those mistakes cost you the most money? How much? So why am I doing this to you? because I'm trying to get you to recognize that these mistakes come with a real cost. And you just told me that not only have you made these mistakes, but that you continue to make them. Are you ready to get off the treadmill? Right? Are you ready to get serious about putting together a system with some discipline to keep you from making those kinds of mistakes? All right, so what's the underlying feature that keeps us making these mistakes? Well, the big problem is that the model that you have, that you've been using to invest, that system's broken. Right? You had a broken system giving you broken results, if you had a system at all. Right? A lot of us don't have any kind of trading system. Right? So to fix it, the obvious fix then is to install the correct system. So I want to share with you the system that we use with our clients, the system that we teach and support with live coaching every week. We get together and focus on this 5-step system. In these webinars, I like to draw it out as a triangle, and then we'll segment that triangle into 5 parts. 5-step system, right? All right, so the first step is that you want to be able to analyze any stock that you own or are interested in owning and know whether it's over or undervalued, whether its earnings are rising or falling, and how safe it is. So take an inventory of all the stocks you own or want to own and really understand them from those 3 perspectives. Number 2, you don't want to hold on to losers too long, so you need to make sure every stock you own has a stop loss in place to minimize your risk. Right? In other words, you want to know your exits. Third, you don't want to ignore market direction, so you want a definite signal or rule in place to make sure you know when the market is rising, so you know that it's okay to be buying. Some people use moving averages on the S&P. A lot of institutions use them. Right? Maybe you've heard of the Golden Cross, the 50 and 200-day moving averages of the S&P. Right? So the same pros that are telling you can't time the market are timing the market. The key here is we're not predicting where the market is going. We're simply identifying that it's currently rising. All right, so for me, the 5200 is a little slow. I'll talk about what I use here in a little bit. But you want a definite signal, right? Something that's rules-based that's telling you that it's okay to be buying stocks. Fourth, you don't want to buy stocks that are going down, right? So you want to find good quality stocks that are rising in price for your portfolio. You want a technique that finds stocks that are likely to go up, not down. And finally, you don't want to trade emotionally. So you want a written plan that you follow and you know works, right? It's not just some, I was going to say goofy, but not just some idea in your head, right? Some dream in your head, but it should actually be written down, and written down with enough specificity that you could hand it off to your brother-in-law, go on vacation, and he'd have no trouble running your account. So if your trading plan is buy low, sell high, that's probably not specific enough. Right? Using this 5-step process then leads you to trade with confidence and generate consistent performance. So let's do a personal inventory again. The first thing you want to do is focus on any of these areas where you're lacking. So take your pen and pencil, and let's start with the good news. Any of these that you do consistently well, put a smiley face next to it. If there are any of these that you either don't do consistently well or don't do at all, put a frowny face. Obviously then, anywhere you have a frowny face is an area you need to focus on. Right? And it's pretty easy. Start at the first one and work your way down because one feeds into the other. So we obviously aren't going to be able to fix all these today. We don't have that much time. Right? But you've identified the holes in your trading plan, your trading system, I should say, and you know where to work on them, right? You need to have 5 smiley faces for that consistent performance. All right, so let me ask you, what did you just learn about your investing strategy? Right? Well, a lot of folks at this point realize that they have no system. Right? They buy companies, they buy stock when the economy's doing well and they hear about how much money everybody's making, right? So they go out and buy a couple $1,000s of companies that they do business with. not even thinking about whether or not the company's actually profitable, but I like their tennis shoes, so I buy them. Right? Well, when do you sell? Well, the opposite of that. When the economy's doing really poorly and everyone's talking about how much blood there is in the streets, you open up your portfolio and you go, "Oh my gosh," and you sell at max pain. Right? That is not a system. And it's certainly not going to be a successful one. All right. So, we have some work to do there. Let's move ahead though and talk about how to find winning stock trades. Okay? Let's kind of set the table again. What's the problem? What's holding everybody back from being able to just find winning stock trades? Well, it might not surprise you at this point that the problem is not necessarily all your fault. As Mr. Miyagi told Daniel-san in Karate Kid, there are no bad students, just bad teachers, and the industry is full of bad teachers. Right? If you try to take this on yourself, the first thing that happens to you is you just get buried by data. When I started in the 70s, I still remember the first day I opened the financial pages of the Detroit Free Press. Shout out to the Detroit Free Press. You open up that page and what? There's like 4,000 stocks listed in a number 4 font and 36 columns of data, and you're looking at it going, what in the world am I supposed to do with that? So by the time I got down to the B's, I figured out that that was not the approach that was going to work for me, right? You get all these data points, and of course this is not an extensive list by all the data points that are available to you, and you're thinking, well, okay, which of these is the most important? Well, there are services out there that say, for a nice little monthly fee, a low monthly fee, we'll provide all this data for you. And looking at this sample report, I go, wow, yeah, you're right, there is a lot of data there. Can't argue that at all. But I'm still left with this question of, okay, in all that data, what's important and what isn't? Well, you give me these 12 bullet points, so maybe that's the 12 most important data points on the page. But even that doesn't really solve my problem, because how do I compare this stock to another candidate stock and make any kind of intelligent decision based on 12 different data points? Right? So the real problem here is that I'm like a mechanic with the wrong wrench. Right? It's not a data problem, it's an information problem. Right? Additionally, you get the gurus again, and I'm going to use Mr. Cramer as my example, not to disparage Jim Cramer. He's a smart guy, made a lot of people a lot of money, right? Good at what he does. You don't get your own TV show by being some slouch. I'm just going to use him as my straw man for the industry, right? Because he writes in his book, Mad Money, that if you want to take this on for yourself, then you need to commit to doing 1 hour per week per stock of analysis. Right? Much less than that, you might as well be gambling. Well, if you run a 10, 20 stock portfolio, do the math, right? You just signed up for another job. And the subtext of the message is, well, yeah, you're right. It is too much for you to do. It is another job. That's why I'm a professional. I've been doing this for 20 years. Just send me your contribution and I'll let you know how well you did. Right? Kind of a little patronizing pat on the head of, there, don't you worry, I'll take care of that for you. Well, we already saw in the Dalbar study how well the average fund manager is doing, right? So that's not the solution, particularly if you want to take on personal control, right? So what ends up happening? Well, you take it on yourself, right? And you're pouring over all that data, or you're looking at 200 charts a night for whatever chart setup you're looking for, right? And what happens? You're looking at so much data that it all just kind of becomes this blur, and you convince yourself that you're seeing things that may or may not even be there. Right? I'm sure you've been in that situation. You take the trade, it doesn't work out, you look at it in hindsight and you go, what was I doing? Right? So, we're not being given the right tools, we're stuck in analysis paralysis. What do we really want? Well, we'd really like to just get to the solution. Right? When you do this right and you know what to look for, you'll be able to look at a graph and quickly know whether or not you should buy the stock. Right? If you don't believe me that you can do it, get your pen ready, because in a minute, you and I are going to walk away from this section with, I'm guessing, at least 5 stocks that you'd like to trade on Monday. All right, so let me show you how to do this. But let me set you up for success. Dr. Giolito, the founder of VectorVest, teaches us that good portfolio management starts with buying the right stocks. He makes a nice sports team analogy that if you fill up a team with great players, just having the great players on the team will help the team do well, even if you're a lousy coach. So with our portfolios, if you fill your portfolio with really good stocks, just having the good stocks will help your portfolio do really well, even if you're a lousy portfolio manager. So let me share the checklist that we use to teach our clients to use when they're looking for their candidate stocks. The first thing we look for is stocks whose price is steadily rising and not volatile. Secondly, we're looking for companies that are making money and growing their earnings. In other words, making more and more money. And thirdly, we want to favor undervalued stocks. All right, so let me give you a little quiz. We're looking at 3 price charts, all of them 1 year in duration, daily candlesticks. Of those 3 chart patterns, which of them has steadily rising price? Hopefully this is an easy question or an easy answer for you. So, yes, Richard, thank you for being first. Theodore, Kaz, yes. Number 3. All right, trying to warm you up here. All right, so number 3 has the steadily rising price. Bonus question. Of these 3 price charts, which is the one that you would typically trade for your own portfolio? Put a little flag here. You can be honest with me because you can be honest with yourself. Nobody's recording what you said here, right? So I have a lot of 3s coming on, which is great. If that's true, that's fantastic, right? But I know there's also a couple 1s and 2s in the crowd as well. So let's talk about it here, because it's not necessarily irrational, right? Why do we like number 3? Let's start there. Let me get my pen going here if I can make that happen. All right, so number 3 is going bottom left to upper right. Smoother the better is how I like to say it. Not a lot of volatility. Right, so the price has been going up for the past year, but it hasn't been going straight up. Right, it had a little area of consolidation here. It's had pullbacks. But here's the key. The pullbacks, when they happen, are not outrageous. Right? Not anything that would scare you. Right? In fact, if I had a portfolio of 10 of these guys, I would sleep like a baby, because I'm not worried about some outsized drawdown happening overnight that scares me out of the trade. And it's very easy for me to recognize when this price pattern has truly broken down. If it actually started moving against me, it'd be very easy to see that I broke the price trend. If you had a complaint, and yes, I can read your mind, right? You're saying, well, that's nice, Todd, but you know what? Show me how to buy that over here. This thing's already made its move. I want to find it over here at the bottom left. Fair enough. But I want to table that question here for a minute, because I want to talk about numbers 1 and 2, because I know there are people in the room who buy number 1 and 2. First of all, number 1, this stock is in a downtrend, right? And we already talked about buying stocks that are in downtrend as being a problem because you don't know where the bottom is, right? And so that sets you up to make that mistake where you're waiting for it to come on back. So we know already that we don't like chart pattern number 1. Chart pattern number 2 is kind of a more interesting conversation, or at least more nuanced, because the stock is higher on a year-over-year basis, although not very much. But it is in an uptrend, right? It's hitting higher highs and higher lows as it meanders. But as you look at that price action, right? What did you notice about the swings? It's making big price swings. Now, if you're a trader, you're okay with that because you're trying to get in here and get out here and get in here and get out here, right? But if you're trying to hold this stock for the duration, this is a Maalox moment, right? This stock is a nightmare because one day you're up 10%, the next day you're down 20, right? So these swings, these are 20, 30% swings in the price action. So let's pretend you're trying to manage this trade and you're saying, well, okay, I know the uptrend ends if I put in the lower low. So here the price rolls over, and instead of going back up, it continues to fall. It's down, it's down, it's down. Oh, I took out that prior low. Let's close the trade. You're 20, 30% off of the high. You just watched your winner turn into a loser before you could recognize that the pattern had broken down. Right? Yeah, Theodore, the absolute bottom is always zero. That's if that's comforting, I guess. All right. So that's why number two is kind of problematic, right? Hard to manage unless you're the trader who's trying to jump in and out. So your objectives definitely matters in how we're trading these stocks. So let's talk about number three. I've extended the graph now to be 3 years. On the graph now we have this green line, which is the calculated value taken from the VectorVest program. We calculate the value for every stock in the database every day. Below that then are the daily candlesticks for the price action. And on the subgraph is our earnings per share data. Now we treat earnings a little bit differently than you may be used to. We don't just look at historical earnings, we also look at earnings forecasts. The forecast is provided by the industry analyst following the particular company. Right? So we include those in our algorithms. And we do that because that window into the future, if you will, that forecast is what's going to drive future price and value. So investing is a forward-looking endeavor. We want to know what the prospects look like for that company. All right, so let's look at it here. Price action, bottom left, upper right, smoother the better. Check. Making more and more money, price or earnings, bottom left, upper right, smoother the better. Check. Undervalued. Check. So let's say that we found this stock a year from the left edge here, right? Because this stock has already made its move, right? Was the thesis. So we came across this stock in October, right? Stock has moved from call it $30 up to $50. You find this stock, this is the hard right edge in our imagination, and you're thinking, wow, that's a beautiful chart driven by rising earnings. Fantastic, but you know what? That's at its 52-week high. I can't buy that stock now. It's already made its move. So you go, I don't know, buy the stock that's in the downtrend so you can get it a little cheap, I guess. Later on, about a year later, in fact, you run across the stock again. You go, oh yeah, that's that stock that I saw before. Wow, it's at another 52-week high. Sure glad I didn't buy it because, man, it's already made its move. Right? Even after this period of consolidation, it's still at a 52-week high. I can't buy it. And of course, it's gone from, 50 up to now 65. And now we're back into current day. It's now at 90. And you're going, man, what a great stock, but it's at a 52-week high. I keep missing it. Well, yeah, you sure do. Because back when you were at 50, right, the move from 50 to 90 is the one you just missed because you couldn't buy it because it was too high. So what's the difference between this and some run-of-the-mill startup biotech kind of technical trade? Well, the difference is this. The company's ability to consistently perform financially, driving its earnings higher, which is driving its value higher, which is driving its price higher. Right? Not that the market can't sell off for whatever reason or news story. That happens, sure. But the fundamental concept here is that the fundamentals driving the stock price higher is what sustains the extended uptrend. Very hard to find extended uptrends on speculative stocks. All right, so there's our checklist. Stock price steadily rising with low volatility, company making more and more money, growing their earnings, and we're going to favor undervalued stocks. We can still buy overvalued stocks if that's kind of what the market is offering us. But if I had an A-B choice and one is undervalued, one's overvalued, I'm going with undervalued. All right, so remember we talked about Steve earlier in that Windstream example? This is what would have saved his bacon. Right? What do you think we talked to him about? We talked to him about those patterns. Right? We went through the checklist and we said, well, Steve, hang on a minute. You got a stock that's in a downtrend, that's horribly overvalued, and earnings are falling. We didn't get a single check mark, right? And so for Steve, that feedback loop was his aha moment. He said, oh, wait a minute, you're right. I fell back into what I had been doing before, right? I didn't take on the new regimen here. And of course, we saw that it was a good thing that he did. Just call the mulligan, sell it off, and go take another stab at it, right? So, what I'd like to do before we go looking at stock charts is I want to show you what to look for. Let's get some examples of good price and earnings action in our mind so that we can kind of paint the picture, because every stock doesn't look the same, you might have noticed, right? So again, don't worry about the time frame or the symbol. Look for the bottom left, upper right, smoother the better price action driven by similar earnings performance. Skyworks, same thing. Bottom left, upper right, smoother the better, driven by earnings. I do like to point out that this pullback in this time frame was concurrent with a market pullback, and you'll often see that solid stocks pulling back just because the market broadly is pulling back. So what we like to do is, after the market corrects and the stock corrects, then you can re-enter the uptrend as the market starts rising again. So we're going to look for that smooth pattern. Southwest Airlines, similar market performance, right? Bottom left, upper right, smoother the better, driven by rising earnings. Advanced Energy, okay, wow, they didn't pull back, right? So, wow, all right, yeah, that's easy. That's an easy one. Kind of pops out at you, right? Nvidia, even after it consolidated here for a couple months, taken off again. Ultra Clean Holdings, bottom left, upper right, smoother than better price action and rising earnings. All right, so with that mental image, let's do it together. I'm going to open up the VectorVest program. We're going to look at our top VST stocks in the current market action. Right? Today's time and date. We're streaming data here. This list of stocks, as you may have noticed, is not sorted alphabetically by symbol or by name. It's not in here by market cap or by price. It's sorted by our indicator called VST. Remember, we talked about how you get all those data points, and data points aren't conveying necessarily information. Right? Our analysis of every stock conveys information. What's its price? What's its current value? What's its upside potential with our RV indicator? How safe is it? What's its current price trend? VST combines those three mathematically so we can see that in combination, which stocks in this database of 8,300 stocks has the best combination of value, safety, and timing. We bring those to the top of the list. That's the best place to start in our estimation. Right? So leaning on the strength of that system, I'm going to graph these top 20 stocks. So what I want you to do is look for those graph patterns we just practiced. Now here's where it gets interesting. I'm going to give you 3 seconds to decide whether or not you like the pattern. I'm going to force you to rely on your gut instinct, right? We're visual beings. So you're very good at recognizing patterns, smoothing lines, etc. I just want you to recognize your kind of initial gut response to the price pattern and the earnings pattern. If you like it, write it down. If you don't, let it go. Right? There are some that'll be better than others, absolutely. Once you've identified the ones you like, you can go back there and do all the vetting you want. Right? Whether to pay a dividend, I'm trying to think of things that you might want to vet, right? How much volume is there, etc. So, first pass, I just want you to go with the gut instinct. So, we're going to graph all. And let me get this full screen so that you have no disadvantage. So INS is our first candidate. You can see it's a 1-year time frame. Let me expand it out as best I can for this screen resolution. So if you like the pattern, then write it down. If you don't, we're going to move on. And so it's going to go something like this. I'll say INS 23 and we'll move to the next one. Got it? All right. So by the way, if it's a maybe, it's really a no. All right. So INS 2, 3. ENPH 2, 3. EHTH 2, 3. KNTNF 2, 3. PAGS 2, 3. KL 2, 3. AU 2, 3. CAGDF 2, 3. LSCC 2, 3. CPRX 2, 3. HALL 2, 3. EGO 2, 3. AXU 2, 3. HEI 2, 3. PERI 2, 3. NOC 2, 3. APPS 2, 3. GHDX 2, 3. I'm counting 2, 3, Damon, because I'm giving you 3 seconds to look at each chart. HEIA 2, 3. PLMR 2, 3. Pencils down. All right, so what did you think? Well, first of all, hopefully you found at least 5 that you liked, but the first thing I noticed is they didn't all look good, right? Or some certainly looked better than others. Let's put it that way. And it was pretty easy, particularly if I was looking at something I didn't like. When something that I did like popped, all of a sudden I was like, oh, yeah, right? So intuitive, easier, faster, right? The tool is bringing you the stocks that are good candidates. Now you're just confirming they're doing what you want them to do by looking at the price charts, right? So hopefully, again, faster, more intuitive, right? And you're in control. You're driving the bus. I don't know how you've been finding your stock picks from before now. Maybe you're getting recommendations from the talking heads on TV, whatever. But this obviously puts you in control. All right, so you obviously, if you had to decide at this point, would you rather find stocks by going through all that ton of data or looking at the 200 price charts, or would you rather get your answers quickly? Well, when you're using a checklist like the one I showed you, that checklist, the use of it, gives you so much more confidence, keeps you consistent, and saves you so much time. And of course, that's important for your success in this 10-minute idea, right? This 10-minute routine. So let's talk about how we're going to put some of the things that we've talked about so far today together into this 10-minute time frame. Right? To do this, we're going to lean back on Rob, our case study. Right? We're going to see how he went from being stressed and overwhelmed in the global financial crisis to finding success using a simple plan. Right? So if you remember, his retirement plans were ruined in 2008 because he wasn't watching market direction. He'd lost 40%. He was going to have to go back and get a job. He said, well, before I took that drastic step, right, I started doing my own research to try to recoup my losses, spending hours each day in front of the computer, reading articles, listening to so-called experts. Subconsciously, I was only hearing what I wanted to hear. I was now beyond despair. It all looked too hard, and getting back onto the job treadmill seemed inevitable. So let's talk about what he did to right his ship. Right? We're going to draw it out again. Right? And this time you're going to draw a table 3 by 3. So there are 3 main sections to the plan. They are when to buy, what to buy, and when to sell. Sound familiar? Right? We talked about them as being the 3 pillars of any trading system or any trading plan. Right? So for the when to buy, the first thing Rob wanted to do was make sure that he used a market timing signal to tell him that it was okay to be buying stocks. Right? If you were buying stocks in 2008, you got crushed. I don't care what you bought. Right? So some people use moving averages on the S&P 500. In our system, we have a thing called a green light. And that's what Rob used to tell him that it was okay to be buying stocks. Secondly, you want to make sure that right up to the point that he executed the trade, that the market was still rising and so was the stock that he was going to buy. All right, those are for his rules then for when to buy. For the what to buy, well, that's easy. It's just our checklist. Find stocks that are in rising price trends, that have rising earnings, and are undervalued. For the when to sell, he adopted a market timing signal to exit the market and move back to cash. And I think this is interesting because remember, he developed this back at the bottom of the market, right? The global financial crisis. So with that pain still in his brain, he wanted to get back to cash where he knew he was safe, right? By doing that, he takes 2007, 2008 off the table. It will never happen to him again. Now, I recognize you may not want to sell out of your portfolio, go back to cash, but you at least want to hedge it or protect it somehow from the capital loss. All right, so he used a market timing signal, used a thing in our system called the confirmed down call to protect his portfolio. Secondly, every stock in the portfolio has a stop loss. Predetermined. He knows it before he gets into it, right? Before he gets into the trade. And finally, he has a profit target. This helps him eliminate greed, right? Maybe you want to let your winners run. Maybe you want to take off, right? Once you hit your profit objective, maybe you want to take off some of the trade. Um, you know, you want to think that through, right? It's the opposite end of the fear piece. You start getting nervous when you've made quote unquote too much, right? So plan it out ahead of time. What am I going to do if I have a 200% gain on this? What am I going to do? How am I going to handle it? Right? So this was his plan, Rob's plan, but you get the components, right? So you have the 3 questions that we're answering and then the rules that deliver on each one of those questions. So let's do the personal inventory exercise again. Right? In your trading plan, if you have one, put a smiley face next to any of the subjects where you're doing fine. Right? You're good to go. You have a great way of assigning stop losses. I don't need any help there. If, however, again, you have a thing that either underperforms or doesn't exist, put a frowny face there. All right, again, what you're doing is identifying holes in your operating system, right? Your trading plan. So if you have smiley faces in all your boxes, great. Right? That's exactly what we're looking for. If you have some frowny faces, however, you've got some work to do. Right? And so like we saw in the triangle example, you need to have all smiley faces to find that consistent performance. Otherwise, when you run across your frowny face, it's going to scuttle your performance. Right? So using that system then, Rob turns around his portfolio, gets back on track, right? Recovers his global financial crisis losses by the end of the year, but that's not to make the performance claim. If you talk to Rob, his real point here is, I'm nothing special. If I can do it, you can do it. Right? It doesn't take a financial degree to be able to do this. Right? And he says, in fact, nowadays I spend minutes a day managing the portfolio, giving me the money and time to do the things that are actually important to me. All right, so that was Rob, of course. Let's talk about what we just learned about your trading system. Right? Let's go back to it. Where do you have your holes? Do your personal inventory. Right? By writing it down, you're locking in on the areas you want to work on to perfect your trading system. I recognize you can't do it all here right now. Right? But understanding the problem is the first step in correcting it, right? So once you have all smiley faces here, how do we create or how do we implement the 10-minute plan? Well, it actually starts with when to sell, right? So when you've had to close out a position, either through a stop loss or you exited because the market was down and you got a market exit signal. What's the next question? It's not what should I buy to replace the stock. The question is, should I even be replacing? If the market is tanking, don't buy a new stock. The odds are not in your favor. When the market is rising, now we'll go out and look for a stock that's also doing what we want it to do. When I find it, then I'll buy it and then rinse and repeat. Right? Once I have the position, I'll put on my stop loss management and wait for something to hit a stop loss. That's the 10-minute routine. That's what it takes 10 minutes a night to do. You come in off the golf course or whatever it is you do. Right? You log on at 2 in the morning. It doesn't matter whether it's 9 o'clock at night or 2 in the morning or 6:30. Do this whenever it's convenient to you, when you have some quiet time, there's no distractions, you're under no time crunch. Open your portfolio, close any positions that have hit their trades. If there aren't any, log off. Or if you've closed the positions but the market timing signal is weak, the market's down, log off. Go take a walk. Go spend time with your significant other. Right? You don't have to spend 2 hours a day to be effective at this game. Right? So that's the 10-minute routine, and it literally can take just 10 minutes a night. And if you spend 13 minutes a night, you're not doing it wrong. Right? So I'm going to guess or assume that you're watching this presentation because you're not satisfied with the results you've been getting so far, right? Or you're tired of getting buried by all the screaming people on television in particular, or those emails that come across your transom that promise you 400% returns on penny stocks in a week and a half. Or maybe you're tired of watching the portfolio pull back, right? Particularly maybe through all this volatility, and you're just tired of the roller coaster ride, right? It's almost to the point where you'd rather just not even look. Well, that's not really a recipe for success, is it? So, all of that turmoil leads you to kind of turn it internally, and you lack the confidence that you can actually do this and do it well. All right, so where do we want to go with this? How do we want to get you to where you want to be? Right? Well, obviously, you don't want to be overwhelmed by the data. You'd like to get your answers quickly. Right? You'd like to stop buying stocks that go down and develop some confidence that you can actually buy stocks and they're going to work out. Right? And you'd like to, for goodness sake, get some consistent performance. Not every trade is going to be a winner, but we're going to get some consistency of performance over time so that you can take control of your financial future. Right? So that obviously leads you to the questions, right? How can you incorporate some of what I've taught you today into your own trading system, your own approach? Right? Well, you have a choice. You can do it go it alone, right? Do it yourself. Take a couple of pointers that I've given you today. Maybe watch some other videos or read some books, right? But of course, doing it by yourself comes with some costs, right? First of all, the mistakes you're going to make, right? That's the tuition, but also time, right? It takes time to do all that, and of course, time can be money. Particularly when there's a system that already exists, right? That will get you straight to the results, right? Particularly when you have a job to do working on yourself, right? So why do that when there's a system that's already done most of the work for you, a system used by tens of thousands of people across the globe to help them manage their portfolios? If I wanted to teach you this system, right? If you and I were to work together over the next 30 days, literally you and me in a room once a week for the next 30 days, this is what I'd get you to do. It was the genesis of a course we call the Successful Investing Quick Start course. It was designed so that you can consistently outperform the market in 10 minutes a day. So before I tell you about that course, let me make the point here. Einstein said everything should be made as simple as possible, but not simpler. I don't want to oversimplify things. This is not some kind of get-rich-quick scheme. If you just did this one little magic thing, all of a sudden, it would rain dollars from heaven. What I'm offering is to teach you how to actually trade, to give you life skills that you can use for the rest of your trading life, your investing life. Okay? That's what I'm offering here. If you're looking for the black box solution that just tells me what to do and when to do, then this is not the course for you. Right? You may as well log off and go open the penny stock email. Right? So what I'm offering you and what I want to talk to you about is a course that will deliver your financial future in perpetuity as long as you stay lucid, right? Deliver more money, more financial security, more freedom, particularly as we enter retirement and we need to continue to generate income for the rest of our lives. All right, so the course is the Successful Investing Quick Start course, right? It's designed or put together for serious people who are looking for a simple way to buy the right stocks at the right time and know when to sell. Applying the system, then you'll see steady, consistent gains and remove the frustration and anxiety from managing your own portfolio. Right? So the easiest way to understand the course is me to just map it out for you. It comes in 5 modules. The first module, we teach you how to analyze any stock. Right? You'll become an expert analyzing any stock. You'll be able to quickly determine whether or not it's a good or bad investment. You get rid of all that information overload. You'll see exactly what indicators to look for, and you'll get your information quickly. Model 2 is all about teaching you when to sell. Obviously, it's important because you need to minimize your losses in your trading, so we'll walk you through the exact steps you need to take right now to get rid of stocks that are hurting your portfolio, and we'll also make sure that you only risk 1% of your portfolio on your trade, so you're going to learn how to use stop prices. In session number 3, then, we're going to learn to look for the exact signals that tell you that it's okay to enter the market. This is important because if you buy stocks at the wrong time, even good stocks drop when the market drops. Right? So you've got to know when it's okay to buy and when you should not be buying. Right? When's the last time you heard somebody on CNBC say, "No, market stinks right now, stay in cash"? Right? They don't say that. The market needs you to trade. The industry needs you to trade. All right? So what we've done now is we've gotten the bad apples out of your portfolio. We've identified whether or not it's a good time to buy new positions. Lesson 4 is all about which positions to buy. Right? Without this, you have to rely on gurus sending you stock picks, or you have to waste time sifting through all those chart patterns, right, or the data points you're looking for. You get our 2 top cherry picking techniques to pick the best stocks for your portfolio. You're never left with a guessing game as to whether a stock is good or not, and you'll never have to put your trust in some guru. Right? So we're going to show you exactly what to look for. And finally, the last thing we need to do is put it together into this 10-minute routine, because you don't want to be spending hours managing your stocks. We'll show you how to simplify your day, have a plan, and by the end you'll be able to consistently turn out profits month after month. Right? So here's the thing. If you and I were to work on this course one-on-one over the next 30 days, right, me literally walking you through the course, we would charge you $475 to do that. Well, you're probably thinking that's a little cost prohibitive for me, Todd. Well, yeah, I get it. Right? So here's what we like to do. I'll still roll up my sleeves and work with you. Right? For the next 30 days, we're going to use the VectorVest system and turn your portfolio around. Even if you've had no success or limited experience, we're going to do this together. I've built these 5 lessons as recorded classes that you can access at any time repeatedly. Right? So if you didn't get it all the first pass, you can watch it again, because most of us don't. But that doesn't mean we're going to leave you hanging with just some videos. We'll be there for you live every week to coach you through the session. I'll tell you more about that in just a second. Right? But what we like to do, right? If you want to join me, have me take you by the hand, help you fix your portfolio and plug in a system that consistently works, then we don't do it for $475. We do it for $9.95. All in, total. Right? The cost of Wendy's. I know. Right? I want to make sure that we fix your portfolio, turn it around at little or no cost to you. Right? I don't want cost to be the barrier. Right? As I said, you can't even buy the lunch for that anymore. But I do want you to have a little bit of skin in the game. We'll keep out the tire kickers so I get people who are actually serious about this. So we built this course into VectorVest. Right? So to do the course, you're going to need 30 days of access to VectorVest. So we'll include that for the $10. This gives you time to go through the course, implement the things you're learning, and see the results for yourself. Prove it to yourself that we're the real deal. The tool drastically reduces the amount of time and effort you spend finding stocks and determining the market direction. after the course, you can start a monthly subscription if you like. They start at 69 bucks. Right? If at any time you don't want to continue with the course, even during the class, just send us an email. You can cancel anytime. Now, the second bonus is we don't want to just throw the content at you and hope you do well, right? So I want to help you apply the content. So I'm going to be there with you every week, making sure that you're okay. Every week you're invited to a live webinar where I give you tips and techniques on how to use VectorVest. We'll discuss what's going on in the market and what our financial timing indicators are advising, and I'll spend time helping you to apply the things you're learning in the Quick Start course. All right, so we'll discuss your successes, what you're working on right now, exactly where you need help. If you need help with any part of this system, I will help you. Now, in February, Tom gave us a nice little testimony, and the real payoff here is I don't want to go through all these testimonies, but the big thing for Tom was by generating this written plan, this concept of systematizing his trading, that helped him turn the corner. And I've seen it time and time and time again. Right? In fact, we're on social media. You can see all these reviews. I don't need to read them all for you. Right? We have Facebook pages, etc. Right? So I also have this nice bonus for you if you take on the course by going to vectorvest.com/SIQSC. Sign up for the course within the next hour, and I'll send you a list of 30 handpicked stocks from our staff to help you practice recognizing these price patterns. All right, so that's a nice little bonus for you if you act quickly. All right, so remember we talked about earlier which of the mistakes you had made and what they cost. If that number is anywhere north of 10 bucks, right, this should be a no-brainer. All right, so that's the plan. 5 lessons or 5 modules to get you turned around on the right track. Live coaching to help answer the questions that you need. VectorVest, by the way, if you don't want to wait for the live coaching session, we have support staff available Eastern time from 7 to 11 every day. They all know the system. They can help you answer your questions as well. All right, so vectorvest.com/SIQSC for a whopping 10 bucks. Take a chance. Right? I'll take the first step. Let me prove it to you that it works. All right, by the way, maybe you don't know about VectorVest, even though we've been in the industry for 30 years. This is fully guaranteed. Right? Now, let me say this first. If you take the course and you do the work and you say, well, this doesn't, I'll refund the 10 bucks. But I can see whether or not you ever logged on. I'm trying to discourage tire kickers, right? Because all they do is drain resources and attention away from the people who are actually there who want to get helped. So if you're serious about it and you're willing to do the work, I'll guarantee it, right? Like it, and if you don't like it, you get the 30-day money-back guarantee. If, by the way, I get this question all the time, if you're new to trading, new to investing, and maybe you're not even actively trading yet, you're still trying to build up your account, take the course. Oh my gosh, if I had this information back in the 70s when I started, right, Bezos would be shining my shoes. All right, so let's wrap it up here. There's our address again, vectorvest.com/SIQSC. I'll be happy to take your questions, and I want to thank you first for spending some time with me this afternoon. Let me take those questions, and if you're going to join me, by the way, for the course, then type "I'm in the chat box. Let me know that you're coming in. All right, so Theodore says he's in, so Theodore will be looking for you in our next coaching session, which is, they're always on Thursdays at noon. Right, so when we first say hello, we always ask who's new in the room, because we take extra special care to make sure you're getting off on the right foot. All right, so don't be a wallflower. Just let us know you're there. We'll just say hello to you. Right, no big test. We don't try to haze anybody on their first try. All right. So Kaz is in. Damon, I went live on one sessions in. I want, Damon, I'm not sure your question. I want live one-on-one sessions in 6 months. That means you don't want to do this for until 6 months from now. You can't hold the offer open that long, so we'll just have to look for it to come back again in the future. I hope William's in. Awesome. So we'll look for you on Thursday also. Rich is in. Yes, that's noon Eastern every Thursday. All right, we'll send you an email invite. Of course, you can also log in through the program. In fact, let me do that. Once you've gone to VectorVest.com and filled out the contact information, we will send you a username and a password. When you first log on, the program is going to open up to this welcome page. So on here, the first little tutorial walks you through building a watch list. And I recommend you actually do this because it'll bring you up to speed on those VectorVest indicators. Right? That'll help. And we'll also use that watch list to weed your garden. Weed out the dead wood you've been carrying around too long. Right? But the course is on the training tab. And you can see the Successful Investing Quick Start course. Here are the 6 sessions, 5 lessons. So this is the Quick Start course, right? It's an hour and a half total. This is not a heavy lift. All right, so watch the videos and come join us on Thursday. Even if you've only made it through the first lesson, just wherever you are, come Thursday. All right, say hello, and maybe you listen more than you taught. Well, that's fine, right? But you're going to be absorbing understanding and information just by being in the room and participating. All right, so please come to that. Now, the Thursday sessions, we'll send you the email invite, as I said, but right on the homepage of VectorVest, we have the webcast schedule down here. Successful Investing Coaching is right there. Just click the link to register or join. Okay, easy peasy. If you have any trouble with that, call product support. It's an 800 number. As I said, they're there from 7 to 11. We really do try to make it easy on you. All right, if you're already a VectorVest subscriber, then you obviously already have access to that. Just go to the training tab, watch the videos, and come join us on Thursday. Right? You don't need to sign up for the course. It's already included. All right. The address again for you, James, is VectorVest.com/SIQSC. All right. After finishing the course, Domingo, there is a monthly subscription available to you starting at $69. There are some discounts if you prepay a year. All right. And by the way, I usually get this question too. There are a lot of tools in the VectorVest program, right? There are a full range of users in our subscriber base, everybody from day traders to option traders, right? All using the same platform. So there are a lot of powerful tools within the VectorVest system. I want you to be assured that everything I'm going to teach you is available in the base system. There's no additional costs, no ups, no extras. Right? Everything you need to be successful is right here in the base program. Later on, if you want to kind of turn up the wick and start doing some of these other things, that's certainly available to you, but you don't need to do that to be successful. All right, can I put up the email address again? James, I'm not sure if you want the email address or if you're looking for the sign up page. All right, and let me keep going back to the question list. Jennifer's in. Awesome, Jennifer. So we'll see you and James on Thursday. And Domingo says, I have, Damon too, also have the mobile version. Would that be credited when subscribing for $69? Yeah, give us a call. In product support, they'll get you set up with whatever makes the smartest decision for you. All right, for those of you, by the way, there's some people in the room who are from Canada. So if you live outside the United States, then you get your home database, right? So we have a different database for Canadian stocks. It's actually driven by currency. So the Canadian market database and the US market database are available to you when you live outside the US. We find that the vast majority of our clients trade both their home markets as well as the US because the U.S. has so much liquidity. All right, so for the same $10, you'll have access to both markets. Our coursework and the coaching focuses mostly on the U.S. and Canadian markets. That's where we have the majority of our subscriber base, and the lessons are universal across all of those different markets. All right, the sessions are ongoing, so start whenever you can, and just come visit us on the next Thursday. Right? If you miss any of the sessions, they are all recorded. We'll send you a link for the replay so that you can watch them. You can send us a question by email and we'll cover it in the presentation so you can watch for our answer in the video. Or, of course, you can just call product support anytime. You don't have, because you have a question on Tuesday, does not mean you have to wait till Thursday to get an answer. Right? So we're there for you. We want to help you. We recognize that our success is tied to yours. Right? So we want to do everything we can to help you be successful. All right. Yes, David, we are not a brokerage, so most of our clients have an account with a discount brokerage, an online brokerage. We do have some partners. Let me do it this way. We have this Trade Now function. In the U.S., every market has different partner brokers. In the U.S. markets, we have partnerships with Ally Interactive and TradeStation. You can link the VectorVest system up to your brokerage and generate order tickets from within VectorVest and transmit them to your brokerage account. All right, so we're not brokers, but we can link. If you're not trading with one of those brokers, it's just a simple matter of transposing what you're finding here. I want to buy INS and go key in the order in your brokerage system. Probably not a lot different from what you've already been doing. All right, Mark, you are very welcome. We will see you on Thursday. Awesome. And Domingo's in as well. So looking forward to it. All right. And let me just make a quick call out here. Anybody who has a question that I've not yet answered, if I could ask you to cut and paste and put it back in because I have in the flow maybe missed it. I want to make sure I leave no person behind. Right? So I'll give you just a couple moments to get that in, but I'll also show you again last time here, vectorvest.com/SIQSC. Looking forward to being with you on Thursday next, and actually I'll have Brian D'Amico in with me this coming week as I'm on vacation. Right? But we'll get you started, get you taken care of, and I welcome you to the club. All right, so until next time, have a great weekend, and we will see you next Thursday. Bye-bye.